All right, in today's installment of our Faith and Finance series, we take a closer look at Sharia-compliant investing. Now, Amana Mutual Funds Trust, one of the leaders in this industry, oversees more than $3.5 billion in its growth and income funds. Those funds have received 5 stars by Morningstar, and as you can see here, they've both outperformed the S&P 500 by more than 20%. This is on a total return basis. Well, we met with Nick Kaiser, Director, Chairman, and Portfolio Manager of Amana, to learn more about what he can and cannot invest in based on Islamic law and how that affects fund performance. What are the Islamic criteria?
There are basically several things you can't have, things like alcohol and pornography and gambling. Then there's levels of risk that we measure through quantified measures such as debt to equity, debt to market cap, and use of cash in the business. They can't use excessive amounts of leverage, either borrowing or lending. And so we use debt to market cap of the company, and it has to be less than 1/3. So we look at all the debt and the market cap of the business, and we only really invest in public companies that trade on exchanges.
So finance companies as a rule, Wall Street banks, financial services, not going to be something allowed in the portfolio?
Because they make a large part of their income from interest, which is also one of the things that we are not allowed to basically make interest income from.
Now, you have not always invested by Sharia law. You started out as a general portfolio manager, not restricted by these laws. It seems like they're so nuanced and they're so I'll say subjective. You made a good point to me that, in the Catholic Church, there's the Pope. Everyone knows to look to the Pope to write the rules. But in Sharia law, there are several different governing bodies, and it's really sort of subjective, the interpretation.
They're advisory bodies. The word governing bodies, I don't think they would actually use, but the actual decision is up to the individual as to what's right for him. He seeks counsel and advice from scholars, people who are more versed in Quran and the texts, and so he makes his own decision, though, in the end, rather than the Pope or the priest making the decision. It's really up to the individual in Islam.
And in many cases, I mean, it seems prohibitive, right? It seems, I think you're, in getting some of the background information, you're not allowed to invest in, say, 50% of the companies that you might like to, but that's actually helped your performance, particularly during the downturn.
Well, this was a financial crisis, and so companies that are overly levered, have too much debt, or in the banking industry, let's say they've got a lot of loans out to people that aren't paying, then we avoided those just by the nature of the business restrictions that we have in Islamic finance and Islamic companies.
What's the turnover in the portfolio? What are the restrictions around that?
There are no restrictions, but there is one of the things we're supposed to not do is gamble, and gambling is speculation, and so we tend to have a very low turnover ratio. We're investors for the long term, so our portfolio turnover ratios are usually under 10%.
You say you can't gamble. Does that mean you couldn't invest in a company, let's take LinkedIn, that just went public, right? This is a company that many would argue book to value, price to book, does not make any sense at the moment.
And we wouldn't buy it.
For that reason?
For that reason. As an example, when Google went public, we couldn't buy it. 5 years later, it's a different company. It's trading at a much more reasonable price relative to real businesses and earnings. So what we look for, real business, real earnings, not speculation about what the future might be in 5 years from now if everything goes hunky-dory for some .com startup. So that helped us a lot in the .com years, and it'll help us, I think, staying away from some of the overvalued situations that we have today.
Now, you just opened an office in Malaysia. Do you see yourself expanding? You said you were looking at Istanbul.
We are looking around the world for countries in which to base our analysts, and so that's really what we're doing. We've got a broadening team of analysts. We're trying to learn more about the economics of different countries and regions, and so Asia is clearly the one place that we're involved in. Malaysia is well situated for us. It's the capital of Islamic finance in the world, and so we're happy to be in Malaysia. Well, we'll look for other places as well. Is
there a lot of investor appetite in these countries?
Well, Malaysia is a much smaller population, 28 million people or so. So it's not a big market compared to North America or Europe. Some of these other countries, yes. I mean, there's quite a bit of appetite in Europe, I'd say.